Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books and marketing expert covering Target. Target continues to be devastated by the boycott. Their stores are emptying out. Their foot traffic is down tremendously. Less people are going to the stores. Their sales are down. We have one specific example that we will go over. Their actual final second quarter results will be out August 16th, so we'll see exactly what happened to Target during the start of the boycott, and their stock is still absolutely destroyed, with them down at least $12 billion. Let's get into the story. Before we do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. I'm trying to get to 30,000 subscribers, so if you can subscribe, please do subscribe. Target's stock is currently at $135. Their market value at $62.5 billion. That's down from $74 billion from before the boycott. Just last month, Citigroup and JP Morgan downgraded their stock, saying, hey, this is a company you probably don't want to buy right now. Now they just got a massive double downgrade from another analyst called Raymond James from Morningstar. Target stock hit with a double downgrade on weak sales and traffic trends. Traffic trends talks about store traffic. Let's go over that real quickly. This article from just the beginning of June, Target store traffic plunged 14% in the final week of May. The numbers are out and the verdict is in. Target is in trouble. The retail giant saw a staggering 13.9% drop in store traffic over the final week of May in the wake of the boycott. According to Yahoo Finance, a top Wall Street firm is sounding the alarm about Target's outlook too, downgrading the chain status from buy to neutral. Quote, considering the competitive landscape, we believe Walmart is likely to continue gaining market share, including from Target, and Target's high exposure to discretionary sales, meaning sales that people don't really need to purchase. It's not like it's groceries. Things that are just extras, which represents 55% of Target sales, will not serve them well in the current macro backdrop, which became more evident this earnings season, according to Citigroup. Despite the recent stock pressure, we cannot recommend investors buy the stock given these dynamics and now believe the risk-reward is more balanced, but the risk is more to the downside near term. In other words, you better not be buying this stock right now. But this is the recent double downgrade coming from Raymond James, meaning it went down 2 levels of recommendation from one analyst, which basically is like, hey, you better run away from this stock if you see a double downgrade. Raymond James slashes Target's rating by 2 notches amid growing evidence of weak discretionary spending. Target Corp was hit Wednesday with a double downgrade by Raymond James, which cited signs the discount retailer was suffering from continued weak sales and traffic trends. Quote, our change in opinion reflects our belief that quarter-to-date sales and traffic trends have remained soft after taking a step down early in the quarter and suggest Target is losing top-line momentum. Analyst Bobby Griffin wrote in a note to clients, Griffin slashed his rating on Target stock by 2 notches to market perform from strong buy. The stock fell as much as 0.9% moments after the open before bouncing up 0.1% in the morning's trading. Target's stock has dropped 14% over the past 3 months, while the Consumer Staples Select Sector (SPDR) exchange-traded fund has slipped 0.5%, and the S&P 500 has rallied 12.4%. The downgrade comes 3 weeks before Target is slated to report results for its fiscal second quarter, which runs through July and includes all of this boycotting that happened over their Pride Month displays. The FactSet consensus for revenue has fallen to $25.56 billion from $26.3 billion at the end of April, while the same-store sales consensus swung to a negative 2.2% from positive 0.3%. While they expected their sales to basically be equivalent, now they're expecting them to be down 2.2%, which doesn't sound like a lot, but it is a lot. Well, we have seen further indications that overall consumer discretionary spending, more important for Target's mix of products, was weak during the fiscal second quarter, creating greater potential for a higher promotional environment and consumables mix, and ultimately delaying Target's margin recovery, key part of our prior thesis, Griffin wrote. When they talk about a higher promotional environment, that means having to give higher and higher discounts to maintain the same sales because the stuff is just not selling. While Target is a component of the Consumer Staples ETF, it has relatively large exposure to consumer discretionary trends. In the first quarter, Target's food and beverage revenue represented 24% of total revenue, while rival Walmart's grocery revenue was 61% of total revenue. Over the past 5 years, the correlation coefficient between Target's stock and the consumer staples ETF has been 0.793, while the correlation between the stock and the consumer discretionary select sector, SPDR ETF, has been 0.933. A correlation of 1.000 would mean they move exactly in sync. In addition to discretionary spending concerns, Griffin said pressure from greater shrink or loss of inventory resulting from theft and organized crime remains a wild card in Target's results. He doesn't expect any meaningful improvement for at least the rest of 2023. When they're talking about shrink, this is what they're talking about. It's an incredible article from Barron's. Violent incidents are increasing, Target CEO says. Other retailers agree. Well, this is what's going on inside Target. This is one of their really serious problems. Target CEO Brian Cornell offered a sobering warning to investors during the company's post-earnings conference call on Wednesday. Quote, "The unfortunate fact is violent incidents are increasing at our stores and across the entire retail industry," Cornell said. "Beyond safety concerns, worsening shrink rates are putting significant pressure on our financial results." Then he offered a stunning number. "We expect that shrink will reduce our profitability by more than $0.5 billion compared with last year," Cornell said, using the term for lost inventory. Cornell's comments highlight a growing challenge across the retail sector. That number has been revised upwards to as much as $1.3 billion lost from theft and organized crime. So theft is getting more and more out of control. But it's not just theft, it's also figuring out what to do with the business. And from another analyst who says Target's management has no plan to turn the business around. "I've changed my stance on Target from a hold to sell due to the company's struggles with the current inflationary environment and lack of a plan to regain lost market share." Despite beating earnings expectations, Target's Q1 report revealed falling online sales and flat overall comparable sales, indicating a loss of market share gained during the pandemic. The company's net margins have fallen from 6.5% in late 2021 to 2.49% due to supply chain issues and inflation, and the company appears overvalued at the current share price. So one analyst after another is saying, hey, look, Target is falling apart as it is. In addition to that, of course, they still have to deal with all the boycott problems. The lowest I've probably seen drive-ups. This is a post from Reddit, social media, and it's where Target employees go to just send messages to each other and talk about what's going on in their stores. This post is from someone that says they're at an all-time low in drive-up sales, which are sales for customers to pick up pre-ordered merchandise. They're down to 52 sales. Normally by then they would have 90 or 100 sales. Of course, during Pride Month, they were forced to destroy merchandise such as this mat that says the gayest place in town over their Pride Month controversy. Additionally, a really interesting comment from someone who's trans that said this about Target's Pride shirts. "You would have to kill me before I went out wearing this shirt. I don't want to make me being trans as a cool trait and wear a colorful shirt telling the world that I'm trans. I get microaggressions constantly and am terrified of being hate crimed. Everyone that I have ever told I'm trans since I started passing has treated me differently and not in a good way. I'll be surprised if I see anyone wearing this shirt." So what was the purpose of the trans merchandise during Pride Month in the first place if trans people are essentially even afraid to wear the merchandise even if it were free? It never made sense. Target is owned and controlled really by institutional investors. Institutional investors work this way. Institutional ownership is the amount of a company's available stock owned by mutual or pension funds, insurance companies, investment firms, private foundations, endowments, or other large entities that manage funds on behalf of others. So it's someone who's investing someone else's money. This is a lot like what BlackRock gets criticized for, because that's what it is. Target's percentage of institutional investor ownership is 82.85%. That's where the woke company stuff comes from, the major institutional investors that have tons and tons of unlimited amounts of other people's money to invest, and that's how they exert control on a company like Target and make them do things that really have no business sense. Glenn Beck, like Mark Levin, now has his own battle with Target, trying to get them to carry his book in their stores. So far, they've been banning his book. His book is about the Great Reset, called Dark Future. Target does sell the book online, but they're not willing to sell the book in stores. He's trying to create a social media presence for it. He's trying to get people interested in pushing Target to carry it. We don't know if they'll carry it or not. And these books are returnable. There's kind of no reason for them not to carry the books. They won't lose money if they don't sell any of them, but he doesn't have the same popularity that Mark Levin has. He doesn't have the same friends in media that Mark Levin has, so he'll probably not get his book into Target. We'll have to see what happens. Let me know what you think of all this in the comments below. Are you surprised to hear that Target stock is still destroyed and way below where it was since before the boycott? Are you also surprised to hear that Target actually has theft to deal with? They're losing more than $1.3 billion a year in theft. And don't you think that's something they might want to focus on instead of pushing any kind of woke agendas right now? They really can't seem to afford to be doing that. Let me know what you think in the comments below. Always love to see your ideas. Please be sure you are subscribed to the channel. Click the bell for notifications, give me a thumbs up, and I'll see you again soon with another video. And if I don't see you, I will miss you.